So welcome everyone. I'm here today with Aditya Pattanaik from Sprott. Can you tell me in short what do you do and how do you do that?
My background is I joined Sprott as a geologist and then I transitioned into an investment advisory role where I was basically advising Sprott clients on which companies they should invest in based on their specific investment needs. And if you've heard Rick talk, a lot of people ask him for investment advice and which companies they should buy. And often I hear him say the same thing, is that there is no one-size-fits-all answer. And that applies especially to a space where a lot of risk is involved, and the mining sector is full of that. And so within the mining space you have low risk companies at one end of the spectrum, which is the royalty and streaming space, and then you have the junior mining companies where they're trying to find something new.
Higher risk.
Yeah, higher risk. So my job as an investment advisor is to use my technical knowledge to help clients position their money in companies that fit their investment objectives, their risk profile, time horizons, in a realistic sense. Ultimately with the goal of making sure that as the cycle turns, because this is a very cyclical sector, both in a secular sense but also in a short-term sense. So to make sure that we position people's capital in these correct segments of the market that suits them and keep them invested in those segments until the cycle and the micro rewards those investments for them.
What is your or your client's typical investment horizon? I want to win, for example me, I want to win in 5-10 years.
Yep.
What is your assessment of time? Most of the times, most often.
I think if you think in weeks and months, and if you try and time the market, on average you'll lose. You may have a few wins here and there, but what I find is if you're trying to make the big money, you have to do it over 3 to 5 years. And so what I find is that value additions taking place in these mining stocks are happening because you're buying them when they drill their first hole, and then by the time they have a resource and economics, that's when you get your that X value add in the company. So that takes years.
That's the most common for success. Yeah.
No way around
nice.
it. Yeah.
Thank you for saying that. And I have two questions that are related. How can I get to be a more responsible equity investor? And the other one related, or you can formulate it in the answer together. But so here are in this conference there are pre-screened companies where you think there are good opportunities, Sprott or Rick. But that does not mean that I have to buy these companies and right now. So how do I know, how should we know when to buy these companies? So how can we be more responsible and more smart equity investors? How should I do that?
One of the things I've had the advantage of in my investment career is I was mentored by Rick, so I had the advantage of seeing what he was doing, and to do the things that he's doing, the first thing is you have to think 3 to 5 years. Mm-hmm. That means you have to have a stomach for a lot of volatility, and that most importantly means that you have a deep sense of value of what is you bought and why you bought it and all of those things, which I find is very difficult for most people to do. This is what I've learned from him, is play the price versus value game really well.
Warren Buffett type thinking.
Yeah, exactly.
Yeah, but it's still difficult. And yeah, and I also know this, that okay, even then when we do that, the price can go lower.
Yep.
It could be 50% lower, and that at that point the share should be twice as more valuable to us. And people don't do that. He tells often this tuna fish example. But that's it. So I should look. Can I, for example, believe if I'm just a starter analyst? Can I believe the company presentation when they say, okay, we are worth 500 million, now the share price is 200 million, for example? So how can I believe them? Can I believe them?
I think you have to do your own analysis and have your own views on value. If you are simply relying on a table of statistics that have been put together by a bank or someone else, and you're using that as your guide for value, that is one data point, but that should not be your primary source of information. When I started with Rick, he gave me two questions, and both the questions kind of accomplished the same end goal, which I realized with hindsight. And if you want to become a good investor, I would do this. First, he asked me to come up with a list of M&A candidates in the gold producer category, which means I had to look at every gold producer in the sector and understand the value proposition of each one. When I ended that study, I knew at least the outliers. But when you look at everything at a high level, and you look at it, you're not looking at someone else's analysis, you've done your own analysis of a wide enough group of companies, you know which ones are better and which ones are worse. I think that is one of the most powerful things to do. It takes a long time, and you have to have the skills to do it. But if you can combine, the knowledge of, the outliers in a particular category, I think you're at least 20% of the way there to being a successful investor.
Yeah, what I also did, I know from experience it's a lot of work.
Yeah.
Probably you have much better sources than I do. And what I also did, I looked at the net asset value of the companies based on discounted cash flow.
Yeah.
And that takes a lot of effort for all the assets.
Yep.
And you do this for more and more companies, then you have a better and better picture compared to the rest what a particular company is. And then also I collected data from the previous conference. So I looked also at the producing cost of an ounce of gold, for example, of a wide range of companies. Indeed, then you can see the outliers. What is the middle range?
Yep.
And that also helps a lot. But it indeed costs a lot of time. So that's the approach. There is no shortcut. And in general, if we just realize that, then we are one step closer.
I would agree. Yeah, I think investing is very hard to do correctly. I think there's an illusion almost that I find is people feel that if they time something right, they'll make money. I got a lot of people who came to us in August of 2020 for gold, who came to us throughout 2021 for uranium. So there's
a bit too late.
Well, yeah, and that's basically because you're buying something that's going up.
Yeah. They need price action to validate.
Exactly. Yeah. I think that's a huge mistake.
I hope, maybe I'm wrong, but maybe you did not ask this question from Rick until now. Maybe in your next interview, you do periodically interview
Yes.
Rick, you will ask, because why do some people better, why not? I'm interested.
You need to ask Rick this question while you're here.
Okay.
I think it's a great question. I at one point I thought it was risk tolerance, and Rick was just better at taking risk. But you should ask him this question.
I will ask.
See what he says.
Okay,
yeah.
Thank you. I have one more. Do I have time for one more?
Yeah, sure.
Particularly in this, so it is now very likely that the interest rates will go higher. And that means that share prices are probably going lower. How should we think about that? Should we care? Should we not? What do you think?
I think it comes back to everything we've talked about so far. Is if your time horizon is the next few months, you should not be investing, because prices will likely go down in that scenario. We're also in this position right now where there's an elevated risk of a recession as well. So, you have all these macro factors which are pointing to lower prices in the short term.
Yeah, probably.
In a probabilistic sense, it's the risk is elevated. That said, within the universe of investable opportunities, there are companies that are cheap today.
Yes.
That does not mean that they won't go down, but I can, when I look at the space that I monitor closely, there are companies that haven't been this cheap in 3-4 years, and they've added a lot of value over 3-4 years, but they are being priced at the same price as they were 3-4 years ago. So those are companies I would buy based on that. And if they go down, they go down. But at some point, the value gets...
Should make sense.
Yes.
And,
yeah.
Okay.
So
I
selectively, buy and hold selectively. But there's definitely opportunities right now in the market.
Okay. Thank you very much.
Yeah.
I hope we can enjoy more of your content later as well.
Sure, yeah. I'd be happy to, if you have questions in the future.
Where can we find you?
The best place to find me is by email, is by reaching out to me. I work as an advisor at Sprott, and I am available to speak with anyone who would like to have a conversation by phone or by email. So that's probably the best way to reach out.
Thank you very much.
Yeah, you're welcome.
Thank you.